Obviously, Asia's underperformed the US and Europe this year, and a lot of it's been because of tightening in China and regulations, and also the lack of opening up. Japan is opening up. Its earnings have been quite good, but the stock markets haven't reflected that earnings. So we do think now with a new government, more fiscal spending, more opening up, we'll get a outperformance of Japan over the next few months.
Do you trade then on some of the reopening names? Do you look at domestic consumption? Which particular sectors then do you focus on in a market like Japan if you are attracted to that on the back of obviously what's going on with fiscal stimulus, but also the reopening story?
I think you play two areas. One is domestic consumption, because consumption is actually lower than it was in the financial crisis and after the tax hikes. And that we think will change with the opening. And two, you continue to invest in good companies that are producing good earnings, that are exporting into the US, because we think the fourth quarter GDP in the US will really pick up from the third quarter, which is a bit weaker because of Delta.
All right, on that same theme, you also like Thailand and Indonesia. You said some interesting names in both of those particular markets. What specifically?
Well, I think it's all about reopening. I mean, what you had some guests on earlier. We do really, like the digitalization of Southeast Asia, and we think that will, become like China, but it will take a lot longer. The indexes will change, but over the next couple of months and quarters, it's simply going to be a reopening play. Indonesia is looking very interesting. Financials, reopening plays, and also Thailand as well, as these markets become more open. Tourism comes back and business activity increases, and they have really lagged. The only problem is they're probably not liquid enough for the bigger global investors, but on a regional basis, they look very interesting.